But what burden, therefore, does it place on the FIRS with the ability to unpack these books of accounts of these multinationals?
So the burden actually falls on both sides, right? The FIRS, are going to be happy because now they're having access to information that previously they didn't have access to. That during an audit, they might ask that, look, I want information about your activities and financial information about your subsidiary or sister company in another jurisdiction, right? So that we can make informed decisions whether we think you are shifting profits from Nigeria to that particular jurisdiction. Because that jurisdiction is not mandated to make such information available to the FIRS, it was very difficult to get access to such information. So there was a lot of conjecture and assumptions being made. Now, under the country-by-country reporting regime, if a particular company meets that threshold and has availed such information either to the FIRS or to another tax administration in another jurisdiction, which FIRS is going to get access to through automatic exchange of information, they can now make this informed decision that, look, given this economic activity that might not be too valuable to the value chain of the group as a whole, we question the amount of profit that you are declaring in that country. We think that the amount of profit you are declaring in that country is so high because of the corporate tax rate rather than the amount of economic activity and the value being contributed to the group as a whole. As such, we're going to make an adjustment so that we adjust your profitability in Nigeria to commensurate with the economic activity and value creation in Nigeria, which will then allow you to pay as much taxes in Nigeria as compared to...
So the FIRS can bring back the books and rebase, as it were, your numbers as a multinational in Nigeria and then apply the right tax.
Exactly. So once they get the right amount of profit, all right, you'll be applying the right amount of tax rate to the right base. But where profit has been artificially shifted, what you then be seeing is that the corporate tax rate is being applied to a very small amount. Even if they've declared losses, there might be the case that they might not be paying as much taxes. So that's what...
interesting, when I was going through this, the gazetted copy, I found very interesting in Part 5, Section 11 and 12, that, I'm just talking about non-compliance, false or an incorrect reporting by multinationals, and I see that the administrative penalty of 10 million naira was what would apply in the first instance, and another 1 million naira for every month in which the default continues. This looks like a slap on the wrist for me. If I'm shifting $1 billion from Nigeria out of the country and you penalizing me 10 million naira, 1 million naira every month, I just pay the penalty and keep the $1 billion outside the country. So should we raise this figure?
Not necessarily. This is an administrative penalty for non-compliance. All right. However, when FIS has access to the information, they can still make an adjustment to the profitability of the Nigerian entity and slap additional taxes that you should have paid under normal circumstances. So what is going to happen if they are able to establish that you artificially shifted profit, increase the profitability of the local entity, apply the appropriate corporate tax rate, and assess additional tax liabilities that could move into billions of dollars if you've shifted as much.
That's if you are being smart without being clever.
Exactly. So then if you didn't comply, then they then apply these penalties. So these penalties could be in addition to the assessment of additional tax liabilities if you are found to have shifted profit.
I like the devil's in the details. If that is the case, then I'm going to mark this a go. Because 10 million naira for a company doing multi-billion-dollar oil and gas business in Nigeria looks like a slap on the...
Exactly. No, this is just administrative, penalty, just to force them to comply. All right, in terms of filing on time. So the penalties are in threefold. File your country-by-country report on time if you are the headquartered company here. All right. If you don't, there's a penalty so that it forces you to comply and file on time. Notify FIRS if the headquartered company is elsewhere as to who is going to be reporting to which particular tax administration in which jurisdiction. If you don't, there's a penalty of 5 million, and for each day that you're in default, there's I think a 10,000 naira each day. Then if you give incorrect or false information, we are going to give you a one-time 10 million. All this is just to manage behaviors in terms of compliance. However, if you actually shifted profits, all right, then we're going to correct it and assess additional tax liabilities. That is going to be the big amount.
Okay, that looks like a menu to me, and that sounds very. And I think I'm sure a lot of Nigerians would like a little bit of that. But if you look at the multinationals and the Nigerian economy, actually said in your opening remarks, we can't do without them. Those folks bring in very big FDI
Exactly.
into the country, and we must recognize that for
That's
what
very
they
important.
are. Do you think Nigeria's economy is tied, one way or the other, to the fate on how well multinationals do in this country?
I think for emerging economies and in a very globalized world, it's important that, look, multinationals play a very important role, whether you like it or not, because it's a globalized world. And almost every emerging economy, especially in sub-Saharan Africa, is trying to position themselves to be the hub. That means multinational enterprises will enter and have foreign direct investment. Because the good thing of foreign direct investment is that even when there's an exogenous shock to the economy, they don't easily fly out. Unlike capital investment, where they come and buy shares or bonds and all that. Because the least, poor performance, you realize that there's capital flight. So foreign direct investment is very critical to the success of any emerging economy. And you can see countries like Ghana, Nigeria, Kenya position themselves for more foreign direct investment. So for me, I think it's a necessary evil, whether you like it or not, you need it. All right. What is important is that we continue to give them an incentive to contribute to our economy in a very positive way. And a lot have been said in terms of government demonstrating that when they do collect these taxes, they make the right investment in terms of capital projects to create an enabling environment for these businesses to thrive.
Do you think our corporate tax regime is high in Nigeria? The rate?
The rate itself, when you look at 32 compared to other jurisdictions, you can argue that it's pretty high. Because, look, Trump actually brought that of the U.S. down to about 25. You understand me? And U.S. used to be one of the high corporate tax rate regimes. But then if you then just oppose that to the VAT, which is relatively low compared to other jurisdictions, then you need to look at it holistically. You understand me? So if you're going to bring the corporate tax rate down, is it going to be the case that you're going to bring VAT up?
Because if the corporate tax is 35 and VAT is 5, the difference there go to the consumers in terms of pricing of products.
Exactly. So VAT pretty much impacts everybody.
Yes.
You understand me?
Yes.
And consumers are going to...
So the government is not going to touch that.
Yeah.
But you need to make the environment really more better for these FDIs multinationals to come in. And we can still do it a lot more in Nigeria, in every sector.
Exactly.
So, 35, what are you looking at? Should we do like Trump, 25?
It could be strategic, you understand me? Because if you're going to do that, remember we do have some tax incentives that we give these multinational enterprises.
Okay.
All right. There's pioneer startups. There are a number of tax incentives.
So we shouldn't give them anything
we need to review the success of such tax incentives. If it's successful and it's doing what it's intended to do in terms of job creation, then it's worth keeping it. If not, then you ask yourself, would it be better for government to get access to all this money and do it themselves? Or is it better place giving it to the multinational enterprises and they create the environment for us?
Thank you very much.
Thank you
Let's continue this conversation some other day. It sounds very interesting to me.